in today's context, US dollar is the considered as the reserve currency for the world. So rupee always tend to depreciate vis-a-vis the inflation in US versus India. So if you look at the past for the longer term, it's typically around 2.5% to 2.7% over 20 years. That's been the depreciation trend. However, what happens is that it is not a linear 2.5% to 2.7% every year. It happens in a 5 years time frame in a bunch. When it gets bunched up, you suddenly notice that year rupee has depreciated by 10%, and then there is so much of media hype around that depreciation, so much of bad news, etc., etc. Most of the currencies have depreciated against US. If you look at Japanese yen, which has fallen by 50% in 2.5 years, Japan is considered as a developed market vis-a-vis an emerging market like India, then suddenly you think that, okay, are we better off than Japan? Are we better off than UK when you compare the depreciation? Yes or no? And for next 10 years, 15 years, there will be still that inflation differential between US and India. How does an investor understand this? That is an important element. Okay. When you look at a 20-year dollar return, which is inflation adjusted return, then you will find that India returns are equivalent to US. When you have a 5-year dollar return on the index, MSCI India, it is very much available on record. A 5-year return on index MSCI India is 12.5%, which is after accounting for the rupee depreciation. A 12.5% return on the index is pretty decent dollar return. When you extrapolate that to an actively managed fund, which has given at least a 2% bare minimum over the index, what more do you need as an investor? That advantage people don't realize. What protects you from inflation? And equities is the best bet. That is what many Indians have today realized. And that is why you see the domestic investor participation going up substantially. It is expected to go up much more substantially over the next decade or so. Just remember this fact also. India had a very high inflation 10 years back. It has now controlled its inflation, 4.5%, 5%, which is very good. That gives a lot of comfort when you look at it from a long term on the rupee side. And when you have these kind of extra returns over inflation, how do you create wealth? You make 2% over inflation, you automatically create wealth. You don't need to be greedy.